This week we've seen continued uncertainty and volatility in financial markets following the Brexit decision a week and a half ago. We have seen some, forward progress with the Conservative runoff between the key candidates starting. We're now left with two key candidates there, Theresa May and Andrea Leadsom, and they'll now go to a vote of the Conservative Party members, which won't be known until September 9. So that's really emphasising we're going to see quite a degree of more uncertainty as we await the decision there, and then probably another couple of months before they actually invoke Article 50 and actually start the formal 2-year negotiations to leave the EU. And obviously all of that time is going to lead to a lot of, uncertainty and angst in the UK economy, and we're expecting quite a significant weakening in terms of momentum there. We have noted that Mark Carney has been speaking in recent times, emphasising again that there is a great deal of uncertainty over the outlook, but that the Bank of England is ready and willing to act. And actually next week we'll see them actually meet for the first time after the decision, and there is an expectation among market participants that they will act and cut the bank rate by 25 basis points. And they'll have to then follow that up in August with a full update of their forecast and likely further action, which will include asset purchases. And really the focus of that is to try and bring down the pound and provide further, financial sort of an improvement in financial conditions to the UK economy, and to try and offset some of that confidence impact that we are seeing. If we shift back to Australia, there's been a number of key events that have come through here over the last sort of week or so. Obviously starting with the RBA, they did meet in July. They noted, they remain, relatively sanguine in terms of the overall outlook, not really changing their sort of view on the global economy, noting concerns around emerging markets, but the developed economies had sort of seen stronger conditions to date. Obviously, that didn't really take into consideration Brexit, which is really yet to have a real economy impact that is actually recognisable in the data. But what they did sort of then go on to say was that Brexit had an impact on financial conditions, but overall the markets continue to perform well, and so that's a real key positive for the global system, and indeed for our own economy, that banks are willing to lend, and also that the funding systems that are behind the banks are still remaining in quite good order, and we haven't seen huge amounts of volatility come through FX markets aside from the sharp fall in the pound. They also then went on to say, to emphasise, what they are looking at going forward over the next month, noting that they were going to be watching sort of the key data that comes through and deciding then whether it was needed to actually provide further accommodation or not to the Australian economy. So obviously in the next month, the key data point is going to be the CPI, and here we see really that being, a good, justification for them to come through and cut by 25 basis points, taking the cash rate down to 1.5%. Come August. That's going to really be the focus, and it's really a matter of whether the inflation can surprise to the upside to justify them not moving, rather than really needing strong justification from the CPI to actually cut rates. So at the moment, inflation is really struggling to get back towards the lower end of the 2 to 3% RBA target range, and we do believe that we're likely to see quite a soft Q2 number, which will give further, concerns in that area, and potentially lead to further concerns around inflation expectations as well. So that's going to be sort of, our sort of focus of the next month or so, is assessing that outcome and really sort of seeing that expectations around a rate cut in August solidify. Obviously, we also had last weekend the election, and we are still yet to really get a formal announcement of who has won there. It does look like the Liberal National Party will be able to form a majority of sorts, albeit one that's not a clear majority, so they will have to rely on the independents as well to pass motions through Parliament. Bob Katter has announced that he will provide that sort of support to a Liberal Party, assuming that there is sort of no areas in which he disagrees with. So it's not a formal agreement as yet, but it is one that will allow supply to go through, and for the Liberal National Party to likely have a slim majority in the lower house. There is a great deal of uncertainty around whether they will be able to continue to pass motions as they go through, because obviously there's going to be a very mixed Senate as well, and there's not really clear as to sort of, the main priorities of those senators who have been elected at the moment. So there's going to be a lot of uncertainty sort of on that sort of topic, which we'll have to assess over the next couple of months. And on that point, we have noted this week the last sort of key event of the week for Australia has been that S&P has put us on a negative outlook for our AAA rating at the sovereign level. And that's, been somewhat expected in financial markets for a foreseeable time. There is, an uncertainty on their part as to whether there'll be an ability by the government, given the slim majority that it has, to basically be able to pass new savings measures to actually bring the deficit back into control and actually lead to a a good enough position in terms of government debt and our external debt for the S&P to be happy to rate us AAA. So that's a 2-year time frame in which they can assess conditions and make a decision at any point in that time frame as to whether we should have that AAA rating or be rated downgraded by a notch. Following on from that, they also put the New South Wales and Victoria on ratings watch as well. Unlike the sovereign, which has a 2-year time period, that actually only has about a 1-year time period. So again, they're going to be sort of assessing conditions there and deciding whether there is, I guess, an ability for both those states to remain at that level or whether they'll be rated downgraded as well. Generally, as goes the sovereign, so goes the states. So if we do see ratings downgrade for the sovereign level, that will flow through to the states as well. Next week, there's a number of sort of key data points coming out. For Australia, we'll get updates on business confidence and also the consumer. The consumer release will be particularly important because that'll come after Brexit, but also after the federal election. So that'll be quite a key sort of data point to look at in terms of family finances, unemployment expectations, and sort of just a general outlook as households are seeing it. The business survey came after Brexit, but probably before the federal election. So it's going to be sort of in the middle there. And so will be a good guide as to where things are at, but equally will likely need to wait another month before we get a clean read there. Over in the US, tonight we have the payrolls release, which will be very important for FOMC in terms of understanding their expectations around sort of the labour market and the broader economy. And also we'll have some further updates on confidence both in the US and across Europe as the week rolls on. So, and as I mentioned earlier at the top, that we will also have the Bank of England meeting and likely see a cut there. So a lot going on, and we'll come back next week and wrap it up for you.